Good morning, bulls and bears. Here's your market update covering the US dollar, oil, gold, and the Australian dollar. Let's start with the US dollar. The dollar remained under pressure after US jobless claims rose slightly to 200,000. While the data beat expectations, it didn't stop the dollar from sliding, with the dollar index moving closer to the key 98 level. More broadly, markets are pricing in rising uncertainty around US fiscal and institutional stability. Rather than debating policy outcomes, investors are simply reducing exposure to US assets. This is why we're seeing the unusual combination of a weaker dollar alongside rising treasury yields. For now, the dollar is stuck in a wait and see phase. Trump's softer stance on European tariffs has eased risk aversion, while the Fed's patience on rate cuts is limiting downside. Technically, support sits near 98.3 with resistance at 99.2 to 99.5. Turning to oil, we can clearly see it's still trading below $60 a barrel. Prices jumped earlier this week on supply disruptions in Kazakhstan and slow recovery in Venezuelan exports. The IEA has also raised its 2026 demand growth forecast, slightly improving sentiment. However, the broader trend remains bearish. Oil is still in a medium term downtrend, and recent gains look more like a corrective bounce. Failure to hold above 60 could see prices retest the 58.4 to 57.5 area. A break above 61.2 would be needed to improve the outlook. On to gold, we can clearly see it continues to surge, breaking above $4,900 an ounce and hitting new record highs. The rally is being driven by a weaker US dollar, ongoing geopolitical risks, and bond market volatility. Despite overbought conditions, the technical structure remains very strong. The breakout above 4,500 has attracted sustained buying, and momentum remains intact. Resistance is near 4,950 with a potential move toward 5,000. Support comes in around $4,800 an ounce. Finally, let's look into the Australian dollar against the US dollar. The Australian dollar extended gains to its highest level since October 2024, supported by a weaker US dollar and strong Australian employment data. Job growth far exceeded expectations, and the unemployment rate fell to 4.1%, reinforcing a hawkish RBA outlook. Technically, the Australian dollar against the US dollar remains bullish but overbought. Resistance is around 0.685 and 0.69, while support sits near 0.68 and 0.674. That's your market update. Thanks for watching, and I'll see you next time.